Panama. Documents initially leaked to a German newspaper, the Süddeutsche Zeitung, giving unprecedented insights into how and where the world's rich and powerful stash their cash.
Our world runs on money. Money that is controlled by a lot of rules and regulations that are in place to ensure fairness and order in our society. Or at least, that's what they want you to think. Because as it turns out, not all people play by the same rules. For example, on April 3rd, 2016, the infamous Panama Papers were released to the public, revealing the financial secrets of some of the most famous, influential, and powerful people on the planet. Celebrities, businessmen, even leaders of entire nations. Now at first, these kinds of people might not seem very closely related at all, but they do all have one thing in common. They're all unimaginably rich. And when you're dealing with this kind of money, you really start to run into a lot of annoying problems, like having to pay a lot of taxes, transferring loads and loads of money, or just your money attracting a lot of outsider attention that you would really like to avoid. These are just some of the things that Panama Papers have revealed to us regarding the shady world of financial loopholes that are used by both the ultra-wealthy as well as the criminal masterminds of the world. And really, this is just the very tip of the iceberg. So maybe if you yourself are planning to become a future millionaire, or perhaps even a billionaire, get ready, because today we're taking a look at both the legal as well as the not so legal ways the ultra wealthy hide their money and keep you as poor as possible. Let's start off with shell companies, kind of like the backbone of the global money hiding game. Think of a shell company kind of as a mask. By creating a shell company, you are essentially putting that mask on, and while it's covering your face, everything you do becomes anonymous. A shell company is basically a placeholder company that doesn't actually do anything apart from existing to move your money around, with the main point being that everything that company does is not directly done by you, and so your name is never directly attached to any of those activities. For example, if you're a celebrity and are looking to buy yourself a third mansion or a private jet, but you don't want the whole world to instantly know about it, you could create a shell company that buys those assets for you. And now on paper, some random holdings limited now owns that mansion you just bought, not you. Now obviously, if you're looking for privacy, you're gonna want to avoid most of the first world countries like the UK, Australia, or the European Union, as they often tend to have very transparent financial and banking laws. In most of these countries, you can find out a whole lot about a company by just searching it up on the internet, which is exactly what we're trying to avoid here. Now notice how I didn't mention the United States. And that's because in the US, each state and even some specific cities might have very different laws about financial transparency and taxation, so for most non-US citizens, it's probably not going to be the most appealing choice anyways. Most people would probably be better off looking at some popular tax havens with places like Bermuda, the Cayman Islands, or even Dubai would be fine, as these places have made it very easy to make companies there on purpose, to attract foreign money. They all have different requirements for you to open companies with them, but generally they won't ask as many questions and will make the process as fast and cheap as possible. Now, as you can imagine, this kind of privacy and access to that privacy with such ease can very quickly become interesting, not just for the wealthy trying to find loopholes to hide their money, but also for the criminals of the world that are using this system every single day to commit tax fraud, money laundering, trafficking, bribery, or evade sanctions. And so the glaring question is, why do governments even allow this system to exist? And the answer, as always, is money. Tiny little countries like the Cayman Islands, for example, don't have much going for them. They have very little land and usually an equally small population as well. And one of the easiest ways to create an economy out of nothing at all is making it easy for both the ultra-wealthy and the criminals of the world to do business with your country and just taking a small piece of the pie in the process. And when I say a small piece of the pie, I still mean billions and billions of dollars that these small island nations are able to pull in and essentially sustain the entire country with just one industry. But all these billions of dollars, of course, can't just be magically moved by themselves, which is where the next missing piece of the puzzle comes right in. To some of you, an offshore account might instantly sound like some super shady business, maybe even fully criminal. But the truth is, offshore accounts in themselves are not illegal in any way. In fact, they are essential to anyone trying to move their money around the world. Even the world's largest companies like Google, Apple, Meta, and many others all use offshore accounts and subsidiaries as part of their strategy to maximize profits and pay less in taxes. So how do you actually use these offshore accounts to your advantage? Let's imagine you're a billionaire and you would really like to pay less in taxes because when dealing with billions, even just a few percent in tax is a huge amount of money that you could be keeping for yourself. Since you've already chosen your tax haven and created a shell company, you can now also create a bank account in that country, under the company's name instead of your own, of course. And once your offshore account and shell company are both approved, you're pretty much ready to go. You can now start sending your money to your tax haven of choice and enjoy the much more relaxed tax laws of that country. And if you've chosen correctly, also enjoy the unmatched privacy that these offshore accounts provide you. And it was also simple and relatively fast that in the financial world, it is considered that you're basically leaving money on the table by not implementing these loopholes into your strategy. I mean, the billionaires will never stop doing it. And sure, maybe it's not that ethical depending on how you look at it, but it can still be done 100% legally, so why wouldn't you? Because of this simple and easy implementation, so many companies are using these loopholes that governments around the world are missing out on potential trillions of dollars every single year. Trillions of dollars which of course need to be subsidized somehow, and as per usual, the ones replacing them are not going to be the rich and wealthy. It's the regular people, who just don't have the resources to create such schemes and that are forced to pay whatever tax their government asks of them, and that are sadly forced to fill up the hole in the government's budget that the wealthy people have created. Have you ever heard the saying, "It's not about what you make, it's about what you keep"? And it's often used to point out the difference between revenue and actually making profit. But this saying has another meaning, which is just as important. And it's something that regular people who don't have much to lose would rarely even consider. So here's the scenario. Let's say you're already a billionaire, you've paid off all of your taxes and are living a retired life in peace. You might think your money is safe for generations to come because there's no way you would ever even be able to spend all of it. But one thing that you have to realize is that that money can still be taken away from you and your family much quicker than you could even imagine. Divorce settlements, lawsuits, bankruptcy, and bad spending habits can burn through all of that hard-earned cash in the blink of an eye. In 2018, Nasdaq estimated that 70% of families will lose all of their wealth by the second generation, and 90% will do it by the third. So statistically, there's a very good chance that even if you are a billionaire, your kids will eventually go broke and lose all of that money you spent your whole life earning. Not even mentioning that once you die, the government in a country like the US will take up to 40% of your money in the form of an estate tax, otherwise known as the death tax. You can't even die without having the government take damn near half of your money, which is why almost all wealthy families always have what are called trusts. And here's how it works. Here's you with all your billions of wealth, and here are your children who you'd like to pass as much of that money to as possible. But if you do it directly, either by gifting the money or by inheritance, up to 40% of that money will be instantly gone before it ever even makes it to your children. So to solve that problem, you need to get rid of the ownership of that money, while still somehow maintaining control over what happens to it, which is why you create a trust, which is essentially just a figurative vault where you can store all of your wealth and eventually pass it all down to your children, aka the beneficiaries. There's also a third player in this scheme called the trustee, which has no ownership but has full control over the assets of the trust and is legally obligated to look after them. Usually this would be either a close family member or a financial professional. And now we have made it to the best part. There are multiple kinds of trusts, but essentially, if you create a trust where you irreversibly give up the ownership of the assets, aka an irrevocable trust, all of the assets you put into that trust are no longer under your ownership. Which also means that even if you get sued and have to give up absolutely everything, your money is still safe and sound inside the trust since you are no longer the owner of it. Oh, and that death tax of 40%? Yeah, that also doesn't apply here because you and the trust are two completely different legal entities. And everything you put inside the trust can no longer be taxed, as none of it counts as part of your estate anymore. And just like that, you have successfully secured your family for generations to come, avoided a 40% tax on everything you own, and the best part is you didn't even have to do anything illegal to get there. Debt is an enemy of the poor man, but it is a real-life cheat code for the rich man. For the poor man, it is risky to take out a loan since he might not be able to pay it off later. Most people are stuck their entire lives paying off debt that they've taken on. Most people hate debt, but it is actually the rich people who have the ability to really use its full potential. And here's how to do it. Let's use a real-life example that most of you will probably be familiar with. Elon Musk, because he's your typical tech billionaire, with most of his wealth coming from shares of his wildly successful companies. So one day, Elon decides he wants to make a very large purchase, most notably in recent years, buying Twitter. That is a purchase of $44 billion, and sure, Elon might be one of the richest people on Earth, but even he doesn't have $44 billion just lying around in his bank accounts. And so he faces a problem. He needs to get $44 billion cash, but he can't just sell his shares in his companies since that would create more problems than solutions. The stock price would drop, he would lose a lot of influence in his own companies, and worst of all, he would likely be paying a lot of capital gains tax on that sale, up to 37% in federal taxes alone, which means he would actually have to sell way more shares than you would initially expect. But Elon, of course, did not face any of these issues because he was able to use debt to his advantage. You see, the point is that when you take out a loan, that loan does not count as taxable income like the money you would make from your job or profit from your business. And when you're rich like Elon, banks will be happy to give out loans to you since they know that it's pretty much guaranteed that you will be able to pay that loan back. And sure, that loan might have a high interest rate of even 8 to 11%, but you have to realize that that is still nothing compared to what Elon would be paying in taxes if he took out his own money to buy Twitter. And I think this example really shows clear as day that the very nature of loans is infinitely more beneficial for the rich than it is for the poor. I mean, sure, as a poor person, a loan could come in handy if you're starting a business, for example. But if you're in need of a loan for a business, chances are you don't have the expertise and knowledge to actually make that money back, which at that point essentially becomes just another form of gambling. Whereas the rich person, they not only get to save on taxes, but also get an incredible tool for expanding their ever-growing empire as fast as possible. And there we have it. If you're ever planning on becoming rich in the future, it is more than likely that all of these tricks and methods will come in handy for you, whether you want to keep your money hidden, pay less in taxes, or keep as much of it as possible for the next generations. But also, I think you can start to notice a pattern in this video, and it is the fact that time and time again, it is proven that the whole financial system of the world is built to serve the rich at the expense of the poor, to serve the few at the expense of the many. And so my advice to you at the end of this video is to be observant of the world around you. Follow the money and you will figure out how to make the money follow you instead, in order to become a part of the few, not the many. Good luck out there.